The flagship of Cisco's intent-based networking push, the Catalyst 9000 switch, is leaping out the door, and Switchzilla delivered other good news on its FY2018 Q2 earnings call. The Catalyst 9000 is also in the vanguard of Cisco's other most important strategy, pivoting its income to software and subscriptions. That plan's gained momentum, too. The software transformation means 33% of Cisco's income is now recurring revenue, with subscriptions now more than half the company's software sales, 52%. For Q2, Cisco said it had $5.5 billion in deferred product revenue from recurring software and subscription. It's hardly the first time hardware vendors have attached software licensing models to Iron, and Cisco is alert to why customers might resist it. On the company's results call, CEO Chuck Robbins said for the Catalyst 9000, "We wanted the base subscription plus the product to be somewhere at or slightly below what they would have paid for the previous switch with a perpetual license on it. If Cisco had taken what customers were already buying and added subscription licenses, customers would have seen straight through it and decided we were just changing our financial model at their expense. What we wanted to put in the advanced subscription was fundamentally new technology they couldn't get from us before," he said. Let's hope Cisco sticks with that approach, because Robbins also told the call intent-based networking technologies will spread as far through its product portfolio as possible. We will extend the capabilities across the rest of our portfolio, routing, SD-WAN, integrating backwards into the data center and the security portfolio, investors were told during the earnings call. The Catalyst 9000 is in 3,100 customers so far, which Robbins says is the company's fastest product ramp-up ever. That had led to concerns about a possible gap between demand and supply, but CFO Kelly Kramer said the company expects no ongoing supply chain issues. Adoption of intent-based networking was across the board both geographically and in key customer segments, Kramer said. Total revenue for the quarter up by 3% to $11.9 billion, applications, $1.2 billion, and security, $558 Minnesota, each up 6%, services up 3% to nearly $3.2 billion, while other products dipped 10% to $273 Minnesota. Geographically, North America and EMEA both rose 6% while the Asia-Pac market was flat. The enterprise market grew 3 points, public sector was up 8%, commercial up 14%, but service providers remained weak, down by 5%. The service provider segment squeezed routing revenue, Robbins said. Cisco recently changed its reporting lines and no longer breaks out routers as a line of their own. We're going to take it quarter by quarter, to get the service provider market moving again, Robbins added. Courtesy of its partnership with Google, Cisco's container platform is getting Kubernetes moving into the data center, with Robbins saying he's encouraged with the progress we're making with the web-scale community. That market had become tough for Switchzilla, in the face of initiatives like Facebook's Open Compute and OpenSwitch giving the world's biggest data centers a reason to limit their purchases of proprietary kit. Expect an acceleration in Cisco's acquisition activity, because it's repatriated $67 billion to America in response to the White House's tax plan. Kramer didn't quantify the company's M. We'll continue to look for any M. The cash repatriation will probably lead to a return of funds to shareholders via a share buyback, Kramer added. Because of the reporting periods it uses, Cisco won't get the benefit of the Trump tax plan until the 2019 financial year, beginning in July. Its estimated non-GAAP effective tax rate will go from 21% in 2018 to 20% in 2019. Switchzilla's financial documents and presentations are here, registered signed sponsored. Learn how to transform your data into a strategic asset for your business by using the cloud to accelerate innovation with NetApp.